this is not rocket science. You could probably type into Sam's OpenAI, how do you regulate the U.S. and get a better answer than we're getting from the SEC. Maybe. I haven't tried that, actually. I should try it. Anyway, look, I
really well, and we should talk a little bit about crypto, too, before we finish.
Oh, well, let's squeeze it in. What would you like to say?
So, remember when gold ETFs started? They were very exciting in 2004, and it kind of stayed steady. There was all this hype that everyone's going to buy gold, and oh, come on. So I think Bitcoin ran up. It's kind of going to stay steady. But when the halving comes, it's going to start to rally and grow. So Bitcoin, I think, will grow. And there's a company that I like called Tether. It's a stable coin. And I manage many of their assets. And the Tether Holdings is the name of the group. And the group, I want to say it here with you, from what we've seen, and we did a lot of work, they have the money they say they had. In the last attestation, they said they had 86 billion of assets and 83 billion of liabilities. And I've seen a whole lot, and the firm has seen a whole lot, and they have the money. And so there's always been a lot of talk. Do they have it or not? So I'm with you guys saying we've seen it, and they have it.
So spot Bitcoin ETF, do you think that's going to restore confidence to the whole sector, given what we've seen take place in the last 12 months?
No, that doesn't have anything. That's just a way for Americans to buy it. Can I ask you a question?
Sure, please do.
Why are Americans having anything to do with Bitcoin anyway? Why do they have anything to do with stablecoin anyway? Well, I can give you money on Venmo, on PayPal. It's not an American thing. This is Americans just cocking around like buying Tesla stock, okay?
Well, they're doing that plenty.
I know they do, but this is a speculative asset for us. But for countries like Argentina, Venezuela, Turkey, these crypto assets matter. Stable coins matter in those countries. Okay, they really do. It's a way to hold on to the dollar. So I think Tether's stable coin in Argentina, in Venezuela, in Turkey. I mean, imagine you're in Turkey. You don't want to hold the Turkish lira. I mean, come on. It's going to go down 50% this year. You want to hold the dollar, and holding it in a token, right? Holding your dollar in a token is amazing. So I think that's why Tether's doing really well. You realize Tether has $95 billion in issuance? It's a huge amount.
Moving slightly.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And we have Brad Garlinghouse again on SEC regulation. But guys, we have too many MIT videos of Gary Gensler explaining Bitcoin and crypto, how powerful it is, saying that the banks have monopoly on the financial system. So remember, Gary Gensler is nothing but an NWO chess piece like Janet Yellen or to move us to the fourth phase. And then, guys, we have Lucknock at the Davos speaking about Tether. That's right, guys. He brought it up. That's how you know it's all part of the movie. And, guys, what does Tether represent? The U.S. dollar. What's going to happen to the United States dollar? That's right, crumble. So that's why they're trying to get it out to all these countries. So therefore, when they pull the rug, a lot of the globe is going to go along with it. The Tether movie is right around the corner. And remember, the Crypto Teacher told you. And then we have Jim Cramer. And I told you the SEC was up to their little tricks. Says that the spot Bitcoin ETFs are not ETFs. They're ETPs. And then we have Vanguard playing the Hegelian dialectic, not allowing the spot Bitcoin ETF, and then also not allowing Bitcoin futures now. And we have Danielle from Stellar and Jeremy from Circle, and another one who's pushing the United States dollar, but also talking about regulation of a stable coin. And we know stable coins and CBDCs are illegal, but we know the NWO wants to write it in. And when stable coins like Tether fall, we know the government is going to be right there to replace it. Their stable coin, their CBDCs. It's problem, reaction, solution. And we have JP Morgan's Jamie Dimon keeps sending out the warning. He knows the hurricane is coming, just like we know the hurricane is coming. It is election year. They're going to try to manage it as best as possible. That's why I stated, enjoy 2024. Even though it's going to be rough, it's not going to be as bad as 2025. And we have this $34 trillion debt sitting over the economy. And guys, we know $34 trillion is impossible to have in debt, but we're going with the narrative. You're going to have the fall of America to Babylon and the rise of the BRICS nations. The United States lose the world reserve currency, and you have the rise of China, the dragon's digital yuan, backed by that digital SDR, with the machines taking over the global economy. And we have Trump leading the sheep to the great deception. Democrat and Republican is nothing but the Hegelian dialectic. Never forget the bird needs both wings to fly. And remember, the Cryptoteacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Rollout last week, the era of spot Bitcoin exchange-traded products has begun. In total, the SEC approved 11 of these things, 9 brand new offerings, and 2 conversions of existing crypto ETPs. Last Thursday, they all started trading, and now that we've had a few days to absorb the impact, well, I got to explain what's really going on here. First things first, despite what you may have heard or read, these new Bitcoin investment vehicles are not exchange-traded funds, or ETFs. Instead, they're exchange-traded products, or ETPs, which makes everything more confusing. ETFs are a type of exchange-traded product, but they're not the only type. The SEC has been very clear that these Bitcoin vehicles are ETPs because it makes a huge difference from a regulatory perspective, and maybe for you too. All exchange-traded products are regulated by the Securities Act of 1933 and the Securities and Exchange Act of 1934. But ETFs are also covered by the Investment Company Act, or 40 Act, which is a law that regulates investment advisors. Anybody who issues an ETF is considered an investment advisor, which is a real pain in the neck, legally speaking. The 1940 Act imposes a bunch of fiduciary obligations on investment advisors. Governance requirements like independent directors, restrictions on transactions with affiliated parties, leverage restrictions, custody requirements, and more. Put simply, funds regulated by the 40 Act, including all ETFs, need to be managed on behalf of you, the investor. I bring this up because these protections do not apply to the Bitcoin ETPs that got approved last week. Less than ideal, as you want these kinds of protection, especially because there have been multiple instances of chicanery when it comes to crypto money management. One more caveat. While the SEC approved these exchange-traded products, you shouldn't take that as Gary Gensler, the head of the SEC's company, offering some sort of endorsement. Okay, it's not an endorsement. It's not the government saying these are fine. Matter of fact, it's really quite the opposite. From like Vanguard, the gigantic privately held asset manager founded by the late great Jack Bogle, a leading proponent of passive investing and index funds. Vanguard has refused to make these spot Bitcoin ETPs available to its customers for their own protection. It even went so far as to take away support for all Bitcoin products, including the Bitcoin futures ETFs, that it had previously allowed. In explaining the decision, Vanguard said simply that these things, quote, do not align with our offer focus on asset classes such as equities, bonds, and cash, which Vanguard views as the building blocks of a well-balanced long-term investment portfolio.
Well, and the industry is suffering as a result of the bad actors, and that's the big challenge. From a regulatory standpoint, there's really, I'd love to see stablecoin legislation in the United States. Some of us have been working really hard to make that happen. I hope it does in this first quarter. If it doesn't happen by the first quarter, it's not going to happen this year. Because of the election, we've seen great legislation in Europe that have tried to address some of these issues. But the truth is, even that, it's so much focused on the tech stack instead of focused on outcomes. And that the harm and the potentially harmful outcomes are what regulators are supposed to focus on. And that's a good thing. That's the consumer protection angle. Those are the things that we want regulators to do for consumers and for customers, businesses, and everyone out there. That's not what we're seeing right now, and that's the challenge. I think so much of it is fear-based, and so much of it is because of the fact that we had these bad actors, but let's just be honest, it was already happening before the bad actors came out and we knew who they were. I think that there wasn't that engagement, and I think it was because of the fact that it was this technology that was scary. It's this technology that was potentially a threat, when in fact it's not, and it's an enhancement. It's something that works with traditional financial infrastructure. And despite trying to work to educate and trying to work to say, ask us the questions you want, we still haven't gotten to that nice alignment. In some jurisdictions we have, but in the US we haven't, and that's the challenge that we have.
So last week in the US, the SEC, after a bit of a false alarm, finally approved the spot Bitcoin ETF. How much should be read into that as we talk about the kind of direction of travel around regulation? How significant a moment is that for, obviously for crypto, but also for tokenization? Because a lot of the commentary around that was like, that is going to be a signal to move towards tokenization across traditional finance as well. So I'm kind of curious how meaningful that moment is.
I think that there were already really big signals around tokenization from the OCC and other regulators in the US that demonstrated that, hey, we're interested, mostly because industry is interested. So having industry care made it so that the regulators were interested. I think that, I mean, I would love to say that this is a shift in the SEC's position on things. I don't see that that's necessarily it, but I love that it happened. I think it's a really important step for us.
Passing laws. It's the only way to deal with this, frankly, in the United States is that Congress needs to pass laws that define these things. Other countries have done it. They've been able to move more quickly.
How do you see the U.S. economy playing itself out over the next 12 months? This is an election year. We've been talking a lot about what just took place in Iowa and trying to understand how the American public is going to feel about the economy may ultimately dictate how the president is decided.
Yes, I agree with that. I think it's a mistake to assume that everything's hunky-dory. And, you know, and when stock markets are up, it's kind of like this little drug we all feel. Like, it's just great, you know. But remember, we've had so much fiscal and monetary stimulation. So I'm a little more on the cautious side, that we are facing a lot of things in 24 or 25. And we mentioned Ukraine, the terrorist activity in Israel, the Red Sea, quantitative tightening, which I still question if we understand exactly how that works. I don't think we do. How QE actually worked, what the effect of negative, zero rates was for all this time, and obviously the politics, and and then the Ukrainian war is affecting oil, gas, food, migration. So you have all these very powerful forces that are going to be affecting us in 24 and 25. So if I was the government, I would be preparing for what I'm going to do about that, assuming things aren't good. And I just also want to point out, I wish the Democrats would think a little more carefully when they talk about MAGA, and if you travel this country, and the country's unbelievable. We took our bus trip this year, and Leslie Picker was on Spokane and Boise and Bozeman. People are growing. They're hungry to grow. They're innovating. It's everywhere. It's not just Silicon Valley. So we've got this great hand. But when people say MAGA, they're actually looking at people voting for Trump, and they think they're voting, and they're basically scapegoating them, that you are like him. But I don't think they're voting for Trump because of his family values. Now, if you look, just take a step back, be honest. He was kind of right about NATO, kind of right about immigration. He grew the economy quite well.
China virus.
Tax reform worked. He was right about some of China. I don't like what he did.
No, I said China virus.
Yeah, I understand. He may have been right. And I don't like how he said things about Mexico. I don't like, but he wasn't wrong about some of these critical issues. And that's why they're voting for him. And I think people should be a little more respectful of our fellow citizens. And when you guys have people up here, you should always ask the why. Not like it's a binary thing. You're supporting Trump, you're not supporting Trump. Why are you supporting Trump?
It's hard to hate 75 million of your fellow Americans. And
I agree.
It's done, Cramer.
And, the Democrats have done a pretty good job with the deplorables, hugging onto their Bibles and their beer and their guns. I mean, really? Could we just stop that stuff and actually grow up and treat other people with respect and listen to them a little bit? And I do think the economy will affect. And I think this negative talk about MAGA is going to hurt Biden's election campaign.
Yeah.
That snake gave her a vicious bite. Take me in, O tender woman. Take me in, for heaven's sake. Take me in, O tender woman, sighed the vicious snake. I saved you, cried the woman, and you've bit me. Heavens, why? You know your bite is poisonous, and now I'm going to die. Oh, shut up, silly woman, said the reptile with a grin. You knew damn well I was a snake before you took me in. Does that make sense to anybody?
I just want to ask you back to the 34 trillion that we got, because it seemed like when rates were going up and we thought the Fed was going to keep going higher for longer, it looked like some of that was coming home to roost because the auctions weren't going well. It's like, wow, debt service is much more expensive. This is going to hurt. Suddenly the pat answer is, wow, we're already through that. Rates are coming down again. So the 34 trillion suddenly is okay again. And I don't think it works that way.
Yeah, I think people are making a mistake. I think it is going to come to bite. That could be in 3 years or 5 years or 7 years. I think it may very well bite in the markets way before that, because the market makers don't have because of regulations, don't have the capability to make markets like you used to. So we can easily handle it, but we're restricted by all these rules. And you're absolutely correct. If my numbers are right, in 1980, debt to GDP was 35%. We spent 5% of the deficit because of recession. Now debt to GDP is 100%. The deficit's 6%, and it's in a boom time. And of course, it feels pretty good because we spend all that money. It seems to be working. I think governments are starting to feel omnipotent, and central banks. I'd be much more cautious about that.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a Treasury auction, That's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.